Right, welcome back to Your World on NTV Kenya. Thank you for, of course, joining us again. We thoroughly enjoyed your company throughout the first hour of our discussion. And it's time to shift gears a bit and talk about small and medium enterprises. We all know how key they are in our economy. They make up more than 90% of businesses in the country. They generate employment to about 70% of our population, and they contribute a significant portion of our country's gross domestic product, that is GDP. So why don't we talk about how they fared during COVID-19 and their opportunities, of course, opportunities for recovery after the pandemic. And this morning I'm joined by Mr. Simon Dungu. He's the Chief Retail Banking Officer at Family Bank. Welcome to the show. But of course, we start the discussion, we have a question that we want to ask you. Are you a small business owner? What are the challenges? What challenges did you face trying to access credit during and even before the COVID-19 period? Are you a small business owner? What challenges did you face trying to access credit during and even before COVID-19? And I told you our guest is from Family Bank. And we have a story from Family Bank, actually. And Family Bank set aside 1 billion shillings in September last year to facilitate industrial production of fodder by financing the fodder production activities. The bank has entered into a partnership with Performata Agribusiness Limited in a deal that will see 100,000 farmers and dairy cooperatives access credit to finance fodder production, a critical barrier to the competitiveness of Kenya's dairy sector. Dairy farming remains a priority income-generating enterprise in more than 15 of the 47 counties in Kenya due to its potential to transform the economic well-being of households involved in it. However, the earning potential from the dairy farming activities is greatly hindered by the seasonality of the fodder and forage availability and the non-nutritional quality of fodder fed to the cows.
The issue of fodder is not new. People who are doing an extension work in the Ministry of Agriculture or NGOs, they have been telling farmers, this cow has good breeds, but does not feed enough. This cow feeds enough, but is eating the wrong thing. Eating bananas and you've seen people giving pseudo stems for bananas, cutting some pruning trees and giving the leaves to the cows because they have to see the next season. A lot of drama around feeding.
The earning potential of the dairy farming activities is greatly hampered by the seasonality of fodder and forage availability, and also the low nutritional quality of the fodder fed to the cows. This means that cows do not get enough feed for most of the year, and the feed available does not have the required nutrition to support optimal milk production per cow.
As I told you earlier, we are talking about small and medium enterprises, how they fared during the COVID-19 pandemic and the opportunities for recovery after the pandemic. And as I told you, I'm with Mr. Simon Dungu. He's the Chief Retail Banking Officer at Family Bank. Welcome to the show, sir.
Thank you and good morning, viewers.
All right. I think that story is a good place to start with because that is a response that Family Bank had after the pandemic. And even as I mentioned in my earlier conversation with other guests, this is something that shook literally every part of our economy. Let's just start from the banking sector, how things were for you during COVID.
Thank you and good morning, viewers, once again. The challenge that the industry and the country at large went through after the announcement on 13th of March. It was on a Friday, following the closing of schools and also looking at the international space, how the international trade, the flights, the hospitality, the hotels, and even people all the way to who are doing export business like the flower farms, everyone was affected and everything came to a standstill, including the schools had to be closed. So basically, in terms of livelihoods and the economy, a lot has been affected. People were actually fighting to put the food on the table. And looking at the discussion and looking at how the journey has been, then most importantly, in now discussions will be before COVID and after COVID. You remember back in the day, people used to talk about World War, before World War, and after World War. So these conversations have actually brought a new dimension of thinking. And the challenge to the SMEs was big because, remember, SMEs have always been taken as the missing middle. We have the micros, we have the corporates. So they are very dynamic, they are very changing every day, and they have their own challenges. So looking at that space then, our customers have gone through a series of events. One, job losses. Two, closure of businesses. And actually even going even down further, to even affect their businesses in a different dimension.
Of course. And given, of course, the numbers that I mentioned earlier, they make up more than 90% of businesses. They employ more than, I believe, more than 70% of our population. When we have this kind of businesses bearing the biggest brunt of the pandemic, what does this mean for the economy?
The economy has really gone through a challenge even in terms of economic growth. Thank God that this year now we are bouncing back, even projecting north of 6% and above in terms of economic growth. Then looking at the SME space, the biggest challenge was actually even navigating through COVID. This was the biggest challenge to them. And actually, as Family Bank, we can say we are an SME bank and micro and SME bank. Why? Over 60% of our borrowers actually, in terms of book size, is SME and micro. When you look at count, over 80%, then it tells us then we are an SME bank that is actually supporting the SME business to grow. And the good part is that today's SME is a future corporate. So if you don't support then the SMEs during this particular environment, in terms of access to credit, 2, looking at their collateral because they've always been having challenges with the collateral, 3, in terms of capacity building, training them, and the good part is that we have key areas that we look at, especially during the COVID environment. We provided a lot of training for SMEs through the business club, the forums to help them to navigate and walk the journey with us. In terms of looking at it from the other perspective, which is now the lending part, they went through challenges, so we had to look at the moratorium, the restructure of facilities. And Family Bank, north of even 15 billion, we've had to do restructures for SMEs, just to cushion them and help them navigate this particular environment.
I think that's important because at the height of this pandemic, one thing that came out of many of the researches that were, the research papers that were conducted was that credit and access to credit was one of the key factors that could help sustain these businesses during this period.
Access to credit has been key because you realize, one, SMEs have challenged towards capital because they start as a small business, either from a friendship or a family setup, or even a chama, and they grow. Others go from an individual perspective, you do your own savings, and from eventually now you end up now starting opening up your own business. Access to credit has been a challenge, one, because of financial literacy. Why? You don't know how to do your books, you don't understand even the tax aspect, you don't understand even how to access markets, even doing your own business plans and even projections has been a challenge to the SMEs. So there's a kind of training first we do to our SMEs. Why? Because we want to prepare you for the ground and for the market. Then eventually, as you access to now to credit, you already know what you need to do, what not to do, and eventually even look at areas where you need to focus on. For working capital, we have very good solutions for SMEs. And the good part is because our SMEs, majority of them, they have a challenge around collateral. As Family Bank, we have unsecured facilities to support these particular SMEs. In terms of opening the market through our business club, we actually even create a forum for networking where our customers now can get even to interact and do even business internationally. We have key partnerships with China, especially now the WeChat and transferring money to China. You can send your money directly to China and the international trade business. So that's a key line that we're looking at, towards making sure that we create access to credit to SMEs, opening up the markets, and also build capacity and should walk with them the journey all the way to the very end. So
okay. And of course, this was the issue of credit was identified as one of the much needed policy responses, both by the private sector and the government. But it's not just an issue of credit, but also affordable credit.
Well, you'll agree with me now, the pricing has been flattened after the rate cap was removed. Even the discussions around even the pricing, you saw what the CBK did around even during the COVID environment. One, they reduced the cash reserve ratio from 5.25 to 4.25, allowing now banks to access more liquidity so that they can cushion themselves and also support the SMEs. Looking at the pricing now, talking of even 7% in terms of lending, then the CBR rate, then it tells you now we are trying to make sure that we create that accessible and affordable credit. And Family Bank, we say we enable people to create and sustain wealth through affordable financial services. Then if it's not affordable, then the pricing aspect becomes an issue. And looking at that from that particular angle, then you lessen and lighten the load in terms of the conditions that you're giving to the customers. Remember, majority of our customers, especially the SMEs, I'll say they have ability to repay, but you find down they have a challenge around the collateral. We've partnered with the likes of Africa Guarantee Fund, where 50% of the borrowings we can actually cover with that, and we tell you now, give us 50% of the collateral. And we also even look at where we do unsecured lending, where we just look at your household assets and we just finance you to just walk the journey. Okay.
So is this part of the SME specific packages that you've designed to target this market?
Yeah, there's specific SME-specific packages, and looking at it, we also have brought in some collaborations and partnerships, like we had partnered with Isuzu for financing of asset finance. If you're in schools, especially for private schools, and looking at what they've gone through for over 9 months, they were away the whole year 2020. So it tells you then bouncing back in terms of the COVID protocols. Remember the spacing, the school buses, you have to increase the spacing, looking at even sanitizing, washing of hands. Now that particular space now, key partnerships have come on board. Like for instance, through partnership with Kenya Private Schools Alliance Association, we are financing schools. We are saying Inua Shule. So private schools now we can give them financing of up to even 1 million and above to just kickstart their businesses. Okay. When you look at it from the other angle, we also now through Isuzu partnership, we finance up to 100% for asset finance. If you're in private business, then 95% of that. And we have even construction during the assembling, then a 90-day period and even 60-day period for private sector. Then for us now to make sure that we are supporting this particular area. Okay. We've also looked at the other areas within the SME space. Remember, within the medical space, yes, they were thriving. Remember the chemist, the medical space, everyone was rushing to get medical support. We partnered with Wellwise. These are key partners that are actually helping us to navigate and also get a point of entry to this market. Okay. You've seen now what you've done with production. This is around agri, is also supporting the SMEs. Why? Agri is very key. And when you look at it, in terms of GDP contribution, dairy sector contributes around 88%. So it tells you it's quite a significant and creates employment to over 1.2 million people within the whole value chain. Okay. So we are saying now within that space, then we create funding, we provide employment, and also now we enable now even the farmer to do better. Okay. And remember, we are positively transforming lives as Family Bank. Okay.
And that intervention is really important because the challenge with SMEs sometimes is they're always viewed as being, much riskier borrowers, and most, lending institutions are always a bit shy to lend to them because they feel like the risk of default is a bit higher. But we have a story here about how this research debunked this myth during COVID-19 pandemic. If we can have that story now, and the amount of loans lent out by financial institutions to private sector could grow by double digits this year owing to increased lending appetite by banks and renewed borrowing by businesses looking for working capital to recover from the impact of the COVID-19 pandemic. In its economic and investment landscape outlook for 2021 released in January, ICLA Asset Management says the coronavirus pandemic has partly debunked the common perception that SMEs represent high-risk borrowers and expects banks to increase their lending appetite for SMEs this year. In the 12 months to October 2020, growth in private sector credit stood at 7.7%, supported by a recovery in demand with the improved economic activity following the easing of COVID-19 containment measures. Over the last 5 years, Kenya has suffered a sluggish growth in private sector credit, which touched a low of 2% in October 2017.
An interesting development from the pandemic is that we saw that banks incurred more loan losses from corporate loans as compared to SME loans. We saw a higher level of non-performing loans arise from the corporate borrowers as opposed to SME borrowers. And I think that provides a learning opportunity for banks that the traditional high-risk perception that SMEs have suffered from over the years may need to be adjusted, and perhaps banks need to look at SMEs with new lenses in light of their relative resilience displayed by the SME loan books of banks during the pandemic.
Okay, Simon, from that soundbite, you get to hear the issue. What's your response first?
Well, when you look at it from how banks perceive the SMEs, they are considered risky in terms of their business models. Two, they are, as I called it, the missing middle. They are so full of disruptions and ever-changing in terms of even their business focus. So looking at that, and also they have a default history in terms of the risky part. When you give them the money, then the repayment becomes a challenge, then they end up even changing their allocations. When you look at the corporates, they've always been trusted to be, sound and even with credit, good credit ratings, sound financial background, and also can be trusted more. But when you look at it from the other perspective now, the COVID came even to disrupt the market more. Everyone. Why? When you look at it, most of the corporates that you're talking about, they have an inclination toward international trade, or they have an inclination towards hospitality, the big hotels, and also the transport. Remember, these key sectors that have been affected actually ended up now having a trickle-down effect on COVID and also within the corporate space. The SMEs, they are very adaptive. One thing is that Kenyans are very resilient, and majority of, even in terms of GDP, then the workforce and also the SME contribution, then that aspect of being resilient now made our SMEs now to be more cushioned in terms of even their thinking process, also their adaptability in terms of the thinking of the way they do things, not forgetting also even embracing technology. Because remember, majority of the SMEs now have shifted into technology, even doing things in a more improved way, and becoming more innovative. So that aspect then has brought now a new dimension in terms of looking at the ratings and how we've been assessing and also analyzing SMEs and placing more conditions to even their borrowings. Now this is the time now to relook and also adjust and also support them more.
Okay. So from then the importance of this sector, then how do we make, how do we improve the credit worthiness of some of these SMEs considering the huge role they play in the economy?
When I look at it, then comes in the question of de-risking the SMEs. This is the aspect of looking, this is a risky sector, then how well now do I de-risk them? One is provision of insurance through risk transfer, where we are covering and we are saying even when you are a performance bond customer, yes, you've done the bidding, now you come for performance bond through our sister company like Kenya Orient. Now we do the risk transfer. We tell you provide us 10% cash cover, 90% is covered. When you look at it from the other angle now, we've partnered with Africa Guarantee Fund. This is just to cushion the SMEs. How are we supporting them? Then you tell them you don't need to provide 100% collateral. Because remember I mentioned one of the challenges around the SME is providing collateral. Yes, you have ability, good turnovers, your business seems to be running, but when you ask for security, because banks will always want to cushion themselves, there's a big challenge. So that aspect of risk transfer through insurance and also asking for less collateral and also looking at other avenues where you're talking about even going flat and taking the risk as a bank, where you ensure that the customers are good, where you even support them without even placing conditions around the collateral. So that has been an area that Family Bank now we are thriving. And remember, we are looking at a journey where we want to work with our customers. And we say one of our core values is winning together. We don't win as Family Bank alone. We want to win with our customers. So how well we transform their lives is actually going to be the game changer. And being now as an SME bank is going to be the differentiator within the space. And I'm looking at today's SME is a future corporate. So if you treat them well, grow with them, then you grow together and you win together. Okay,
that's great because you've also given an insight to something else, which is the credit guarantee, SME credit guarantee scheme, which was launched by the government. Do you think we should see more of this if we are indeed going to achieve what you're talking about?
Yeah, it's very important, and I actually applaud the government because remember, the government, once it comes in to support this particular agenda, yes, however much it sounds informal, looking at it even from the perspective of the control and regulations, then if the government supports through the guarantees and also what you're seeing even within the county space, just giving credit guarantee schemes and working with banks and through those collaborations, actually we're going to support this particular economy. Remember, COVID has brought a new dimension, even in terms of the way we do business. Most of the Kenyans used to import things from outside. People used to go to India for treatment. When COVID happened, for the 9 months period, even traveling became a challenge. So in terms of even local manufacturing, remember the Big Four agenda, looking at even manufacturing, what we are doing within the agriculture, the health, universal healthcare and housing. Then when you see people now even processing and setting up plans to do masks within the country, it tells us then we are becoming now proactive in terms of even having our local manufacturing and industry coming up. So with the credit guarantee scheme now from the government and partnering with the banks, then it tells us now there's a better opportunity for us to grow our economy within that particular space. Ultimately, is creating employment to the people and also now impacting in terms of their livelihoods and households.
Okay, let me take you back to the issue about COVID-19 and the obvious response that was expected and was seen by among many businesses, including even big businesses, was either you innovate or die. Talk to us about the adaptation that you've seen interacting with these SMEs during the COVID-19 period.
Well, it's been a very interesting scenario. And someone cracked a joke and said that now even the doctors were being tested by guards, the temperatures. That's how the market has changed, and actually that's the reality of life. When you look at it, social distancing now, even when you're standing in any place, you're actually calculating how much the distance that you have. Even looking at the aspect of even when you without a mask and you're inside the house, you're actually wondering there's something missing. This has become now a reality. So working with within that particular space, navigating through the SME and navigating through the COVID environment, as Family Bank especially, we did a lot of Zoom sessions for our customers. This is just to train them and tell them it is not the end of the world. You can bounce back and actually can make it. We had sessions with key professionals. This was on matters business environment and navigating through COVID, to looking at it from the other angle. We remember there is human resource planning and capacity building for your teams, and also looking at the tax matters and financial literacy. This one now helped us in terms of even helping the SMEs to navigate. Remember, the level of assurance that people needed during COVID environment, it matters life. So encouraging people and telling them this is the way and actually we can make it, it actually brought a lot of, and a new breath of, a lease of life to the businesses. And actually that's why we're even hearing now SMEs are even doing better during COVID environment than even the corporates.
Okay.
We've even gone further and looked at some other key partnerships, like what we're doing with water.org. This is water, health and sanitation. Remember, it's part of the SDGs. And looking at it, then we said then we know to provide water and access to water. Health, when you look at washing of hands, when you look at schools now, they need more water, so boreholes, provision of tanks, piping, and integrating also for the meter companies that are doing water boozers for those people who are supplying water, and also even drilling of water, wells, and looking at from that particular space. We didn't hold the whole ecosystem. Why? Water is life. So if you create access to even clean water for our economy, for our SMEs, for our schools, even for the medical space, then it tells us then this life is going to be better. And that's the space that you've played in.
Okay. All right. Simon, you and I will agree that then it's not all doom and gloom. There's still an opportunity for recovery. There's still a chance for those businesses who maybe they collapsed, or those who are still staggering to come back on their feet. And when we come back from this break, we'll be talking about how we can help these businesses recover. But also remember, you can be part of this discussion. As we promised earlier, we had asked you, are you a small business owner? Are you a small business owner? What challenges have you faced in trying to access credit during and even before the COVID-19 pandemic? What challenges did you face trying to access credit during and even before the COVID-19 pandemic? Please engage us on social media. Use the hashtag #NewNormal on Twitter. Twitter's at NTV Kenya and at Victor Kiprop _. You could also, of course, join the conversation on Instagram and Facebook. We go for a short break. When we come back, we talk about the opportunities for recovery. Don't go anywhere.
Family is working together today. It is creating opportunities for a lifetime of happiness. The future is bright because you can always bank on family. Family Bank, with you for life.
Introducing Ushindi Cream Bar Soap. Ushindi Cream Bar Soap with Oxy Bright removes stains effortlessly and brightens colors. Available in 1 kilogram and 800 gram bars and 175 gram tablets. Also available in all your favorite variants. Ushindi, a quality product from Pwani Oils.
To achieve great things in life, you must do little things every day, like the 1, 2, 3 with Colgate. The 1, 2, 3 with Colgate and give yourself a future to smile about.
Try Panadol Advance for relief from headaches, body aches, and fever. With Panadol's Optizorb formula, the tablet gently breaks down in the stomach, quickly absorbs, and starts providing pain relief in 15 minutes. For fast and effective pain relief that you can trust, try Panadol Advance.
All right, thank you for staying with Your World on NTV Kenya this morning. Of course, we have enjoyed your company for the last 1 hour and 30 minutes. We hope you can stay with us for the next 30 minutes. We are talking about small and medium enterprises and the opportunity for growth after the pandemic. But just before we continue our discussion with our guests, let's just brief you briefly what else is happening across the world. And now in Zone Red, the South California city of Los Angeles can reopen movie theaters, gyms, and allow indoor dining under conditions. Cinemas, restaurants are limited to 25% of their capacity, but for gym, the gauge is 10%.
We've missed it. You know, we did the drive-through or drive-in during the pandemic, and it wasn't the same experience. It was fun, but you know, we really miss just being indoors and having the big screen.
We decided to wait a few more hours just to give us some more time to deep clean the facility, make sure that all the machines are clean from top to bottom, which includes lifting the treadmills, tilting over our ellipticals, and spacing out the equipment to provide 6 feet of distance in between each one. Once they come in, we will also have what's called a crowd meter on our Planet Fitness app, which will allow people to see how many people are in the facility before coming in. And of course, the app is a requirement to check in, which will allow contactless check-in and tracking for the staff as well as for the members.
All right. Also, wheelchair dancers from across Taiwan gathered in New Taipei City last weekend for the Shefu Cup wheelchair dancing competition, a much-awaited annual meet by enthusiasts. Rossi Su, 60 years old, one of the Island's last generation of polio survivor, has been practicing every day in the months leading to the competition, which has now become the highlight of the year for her. Right, and elsewhere, a Chinese hotel built around a central polar bear enclosure for the non-stop viewing pleasure of its guests has opened to immediate condemnation from conservationists at the Harbin Polar Land in northeastern China. The hotel bedrooms' windows face onto the bear's pen, with visitors told the animals are their neighbors 24 hours a day.
These animals do not cope well at all in captivity, whether that's at a zoo, aquarium, or a hotel like this, because in the wild these animals are very active. They're active for up to 18 hours a day. They're roaming thousands of square kilometers, but in captivity they're confined to tiny enclosures that are a millionth of the size that they actually need. And this is why this hotel cannot provide even the most basic needs for these polar bears. This artificial environment is extremely detrimental to these polar bears' health and well-being, because it's the complete opposite of what they would have in the wild. And it is so sad and frustrating that this hotel thinks that by keeping polar bears captive, they will drive in large profits. But in reality, more and more people are realizing that animals are not ours to use for entertainment. I mean, there aren't really any sanctuaries that take polar bears, but there are some facilities around the world where they would have much more space and a colder climate and be left alone. There wouldn't be any humans staring at them, and they wouldn't be used for human entertainment. They could live much more peacefully.
All right, we're now ready to resume our discussion on the small and medium enterprises in Kenya, how they are faring during the COVID-19 pandemic and the opportunities for recovery. But just before I resume my discussion with Simon Ndungu, he's the retail banking officer at Family Bank, let's just give you a story that will lead us into this discussion. Once again, the Kenya Private Sector Alliance last month launched the e-commerce booster program aimed at helping small and medium enterprises to upskill their skills in conducting trade online. Trademark East Africa is financing the program, which is set to benefit at least 2,000 businesses besides receiving training to conduct their businesses online. The traders will also have their hands held in order to get in solid footing in the World Wide Web.
When you register as an SME, first, how to register, you go either on the Amari website or the KEPSA website. You'll find under events or programs, you'll find the KEPSA e-commerce booster program. Click on the links there. They'll guide you to a very simple form that will take you about maybe maximum 5 minutes to fill it in. There's some details that we are asking for you to fill.
Due to the pandemic, there has been increased use of e-commerce as consumers and retailers adapt to the lockdown and social distancing measures.
The COVID pandemic has made it more urgent for countries trailing behind in e-commerce to catch up and strengthen their e-trade readiness.
All right, welcome back. We are ready to resume that discussion with Mr. Simon Ndungu, who is the retail banking officer at Family Bank. Simon, before we went for that break, you had spoken about the role of technology and, of course, helping businesses to, sustain their operations and even recover during the pandemic, even from the story that we have seen.
Thank you, Victor. You'll agree with me now, even the viewers, is that distance is no longer a challenge. What we went through during COVID environment, the Zoom sessions, the webinar, and actually people engaging across the globe through technology. When you take it down further, you realize even now the customers have become more vast with technology in terms of even doing their transactions. Remember, even the regulator came on board to just drop transaction charges for mobile banking, because now mobile has become now the real thing and is actually at the core. So when you look at it from the other perspective, then working through technology tells us then access to financing now, even looking at what even the fintechs are doing now, what the banks have gone into, is actually now even supporting businesses through technology, where you can access, do your transactions regardless of the distance, and also even borrow through the technology. So this has become now the new normal, and actually disruptions that are happening even within the e-commerce space. It tells you now the mobile banking, the digital banking, and family, I can say, especially for any companies that have employees, because remember, there are so many employers now who have actually decided to go digital. Now, family, we have even a solution that is called Family Pay. At the click of a button, you can actually get to process your salaries for your employees. That is the journey that has taken. When you look at it from the other angle, and this is now even our revamped PesaPap, is actually that you can actually get to access even salary advance through your mobile, so long as you're salaried. For the SMEs now, we are going to the next frontier. And actually, even when you look at it from the other space, even in terms of trade, when you find that now institutions have gone even to issuance of instant bid bonds, even performance, and looking at the lending within the whole spectrum. Not forgetting also even in terms of transfers. So this is a space now within the digital space that actually is a new normal and actually has become the new way of doing things.
Okay. Speaking about what you're doing as Family Bank, I've seen something about Fuzu na Family. What's that all about?
Well, Fuzu is a Swahili word which means now to succeed or to make it in life. So we are saying as family, because remember, as Family Bank, we say with you for life. There's everything for everyone, ranging from the child, even the parent, to the youth, or not forgetting also the women, and even the business community. So as you walk through the journey of life, we want to first promote a saving culture. Remember, we've been having a challenge even as an economy where we are net borrowers across. So we want to make sure that even as your kid gets to grow and gets to be acquainted with money, we provide a saving culture. And we actually have an account that you can save for your kids. And this is called Mdosi Junior account, just to build a saving culture and walk the journey. And once they mature, they get to school, they can actually even get to access even bankers' checks or even pay school fees for themselves. And also even learn now even to transact across the digital, be it the card, be it the mobile, even other channels. So once we train our people around this space, then it becomes an easier way as Family Bank to transform lives. So for Fuzu Farm now, we are happy to succeed with our customers. we are supporting our customers and we're telling our customers, we want you to succeed. And in part of the brand building, we want to position ourselves. Remember, we have a journey, our strategy to move to tier 1. Then looking at that particular journey, then we need to work with our customers and support them more.
Okay. Okay, but of course we mentioned earlier how critical the financial services sector is, of course, to this recovery for SMEs, and that every time they are staring at a collapse, they are looking at you to come through for them. And many of them, thousands, if not millions of businesses have closed shop over the last year. There are those who are still staggering and trying to stay afloat. From a financial services perspective, where you sit as a bank, are you giving these people a chance to stay in business? And for those who have collapsed, what chances are you giving them to come back to life?
Yeah, Victor, I'll tell you, as a bank, we have to listen and also support the market. The aspect of our SMEs supporting each other and also working in that cohesiveness is actually the ones that have made it now, even that particular sector, to navigate through this particular COVID environment. Remember, looking at it from the perspective of what the bank has done. One, listening to them, because remember, like for instance, people had challenges around the landlords, the tenants were not able to pay the rent. Looking at the schools, the challenges, even people had to go digital now. Paying school fees was a challenge. Looking at the businesses now, if you, for instance, you're running the hotel or you had a restaurant, or even looking at the bars, and even in the hospitality industry, if you had a facility with Family Bank, then definitely there comes in a challenge in terms of repayment. Then in terms of listening to our customers, one, either give you moratorium, 2, restructure. And remember now, even with the economy opening up, now there comes in another challenge for the SMEs, because now they are really been burnt. They've actually suffered and they've been pushed down. Now bouncing back it means then over and above paying their loans, then they need a bit of financing. So these are considerations we have to do as banks, and actually even offer moral support to them. Because at the end of the day, remember, we want to work with the journey with them and improve our economy.
Okay. We'll talk about reopening the economy in a short while, but just staying with the issue of credit and the role it plays in this journey of recovery, we have a small story here. And although it's well known that micro, small and medium enterprises contribute the bulk of employment and economic growth, it turns out that they also hold the key to the country's post-COVID-19 recovery. This emerged during a pre-launch of the Nation Media Group's 2021 SME Conference and Expo, which will be held this week in Nairobi from 18th to 20th. This will be the second edition of the annual event, with the first one having brought together over 6,000 participants.
And we're really excited to be part of the NMG Expo, because the whole country knows, the whole world knows about the pandemic, and we keep saying that the SMEs are the hardest hit. So we are happy to be partnering with an organization that is going to be doing something about it.
It will give the Juakali opportunity for the linkages and business networking, and this is a very rare opportunity given the times which we are in.
This COVID period, I would say, provided a tragic opportunity, an opportunity born out of a tragedy that we came to appreciate, that we were actually underrating the potential of the micro, the small, and the medium entrepreneurs.
And while nothing could have prepared us for this pandemic, the experience has been really eye-opening. We now have an opportunity to look back and identify the gaps in our response mechanisms that worked, and the weak areas that need strengthening to help build resilience and navigate the new normal.
I did not only see entrepreneurs very excited, but I saw the partnership that we had with the Nation Media Group unlock potential for those who are looking for opportunities, those who are looking for ideas, those who are looking for financial inclusion, and those who really did not know what to do and how to approach business.
This country relies on SMEs. We saw during COVID, SMEs came up with a number of new initiatives. Like we were looking for beds, hospital beds. SMEs came up with them. There are certain other individuals who are very strong with innovation. They came up with things like the ventilators and all those other things.
Quite some insights from several businesses right there, Simon, you will agree with me. But one of the things I picked there is the gaps in our response. We know that there's what the central bank did, there's what you as the financial services sector did. Even from the fiscal side, there is what we, of course, need to support these businesses. But from where you sit, do you think, could we have done better?
Well, I can say it's a collaboration, joint effort between the banks, the government, and also the business community, which is now even through the private sector alliance and also looking at even the SMEs themselves. I was just trying to think through in terms of the support and actually looking at the key opportunities that have come up. With the digital disruption, actually, now looking at the likes of what we've seen, like MyDawa, you can order for medicine online. When you look at the likes of Glovo, you can order for food and it can be delivered to your house. So that kind of innovativeness and resilience has actually brought in now that aspect of looking at things. If we had a chance to start all over again, then we should have started now embracing technology in a more advanced way. Two, looking at it, then we need to change our mindset in terms of looking at how we analyze and look at SMEs. We've always considered them as a risky sector. Then it borrows actually from the words of Warren Buffett, where he said you don't just test the depth of a river or of any water with your 2 feet. So then you put your one leg first and test how deep it is. I think majority of the SMEs, that's what they did. They didn't go flat out. They actually did the balancing act, and they were able now even to navigate this through this particular COVID environment. So looking at it, then it tells us then technology should have come in handy and actually supported better. We pride ourselves as a technology nation where we embrace technology very fast. Two, we are very resilient. Then that part has actually helped us work to our advantage. Then the other part now, having now more listening financial partners. Because I remember at the end of the day, you need someone who can work with you and actually even offer solutions in handy. I'm looking at it from the perspective, retailing has been very, 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 very positively taken, and actually is one of the sectors that have been thriving. This is around food, looking at what call it from farm to fork, people who are in production, especially matters on food, the supermarkets. We've really supported the SMEs within this particular space. And I'm looking at it from the angle of if you're a supplier to a supermarket, we're actually offering invoice discounting. We can discount your invoices and actually now give you some cash to continue now as you supply to these particular supermarkets.
Let me take you back to the point about technology, because part of the research that we've received as a media house, one of the indicators was among the businesses that survived, forget about the ones that died, among those who survived are those that had actually sort of established some bit of an online presence, some bit of a digital platform. Please underscore the importance of this going forward as we look at the recovery.
Thank you, Victor. And this one is not only in Kenya, even looking at the global market leaders, the biggest companies, the most profitable companies, the names of Amazon, you saw what even the electric car, the Tesla, and also looking at it from the perspective of what they did, they actually embraced technology. So it tells us now having digital presence in every institution is now key. And actually even integrating where you're finding now institutions are interconnecting to make sure that you're able to transact. Take it, if you want to book an air ticket now, you can do it online. If you want to order for food, if you want to even visit a restaurant, if you want to take your family for holiday, you can actually do it online. So that embracing of technology across is actually a key thing that is going to be now the differentiator and actually support our businesses.
Okay. And as we come to the tail end of this discussion, part of what these SMEs have been complaining about is what we call a listening ear. That one of walking into the banking hall and getting someone to listen to you and understand your challenges, of course, and try to address them. Are they, from where you sit as a bank, are they going to get this listening ear this year?
Well, if banks and as financial institutions, we don't listen to our customers, then you become, you set yourself up for failure. Why? Remember the products that you're coming up with, even looking at asset finance, the medical space, what you're doing within the supermarkets, supporting customers even who are contractors. If you don't listen to their needs, you'll end up now selling the wrong things. And actually, most important things you find any customer, even who walks even to the kiosk in your neighborhood, you always ask these two questions. Do you have this? Then can I have it? So if you don't offer then what the customers need, then having now that particular innovativeness to embrace their request and actually their ideas and looking at what am I solutioning at the end of the day. And actually even the campaign around the Fuzu family, Fuzuna family, or Fuzu Farm is actually solutioning and supporting our customers to just now become even our ambassadors.
Okay, but even before they get to your door and ask for your support as a bank, for any small business that is looking at you, the ones that have collapsed and they're thinking, maybe I can go back and reopen, dust my shelves and reopen that shop. And for those who are staggering and they're thinking, maybe I can't check this anymore, what do you have to say to them?
Well, most importantly, if you are there, never give up. This life is made up of faces, and men are made up in sizes. So what I look at is encouraging our SMEs. It's not over. This is just a season, and it's going to be over. So what you do, pick lessons, become innovative, and we always tell people and even our customers to play to your strengths. What are you good at? Then pick up that particular business idea, follow through. If it has collapsed, it doesn't mean that you cannot bounce back again. Then for networking and forums that we've been having, especially within our business club as Family Bank, is just to provide that open door policy and also encourage our customers and also offer training where necessary. We've been partnering even with the counties. This is especially during the fight through COVID, and also looking at key sectors that you're looking at, also through our family foundation, just to make sure that we get closer to our customers and having forums with them to just train them, regardless of where you are in terms of business. Whether you've gone down, you've collapsed, you can always bounce back again. And now with the financing aspect now and the training, remember the challenges that I shared with you early during this show is that access to capital has been a challenge to SMEs. Then how do we incentivize, and actually how do we create that avenue for you to access that particular capital? 2, lack of skills. Then how do we train you? Lack of collateral. How do we help you now even accessing collateral? And now opening up the markets, because remember, you could be having products or you could be having an idea, but you don't know where to market it. Right from even the digital presence. Remember, even the artists have been affected, people in the entertainment industry. Looking at it even from the people who are in the import business, they've been down, affected, the Mtumbas, the spare parts of this world. So then when you look at it, then every person across the whole value chain has been affected. Then helping them bounce back is very critical. And it's a journey that we have to walk, or we find ourselves now in a failure situation.
Do we have to pay?
At Family Bank, you don't have to pay. For you to become a business club member, you just need to be a customer, and we create a networking forum. Were it not for the COVID, we used to organize even for international trips for our customers, be it China, be it the US, and through our diaspora space, even our customer within their diaspora, they can actually get to even invest in Kenya through key partnerships, like we have Sendwave, where you can send money directly to your account through Sendwave, and other key collaborations. So that aspect of working with our customers, we value it, and we want to build and make sure that now it becomes a bond.
Okay, so as we of course close this discussion, obviously you've seen how the COVID numbers are going. I mean, they're starting to go up. The restrictions, are staying in place. So perhaps, I think they've been extended actually for 2 months. So perhaps there are those who are wondering, is there really hope? And is there? I mean, can we see the light at the end of the tunnel for this, pandemic to end and us to survive and see this to the end? In your, of course, closing remarks, just give us your outlook for 2021, especially for maybe lending to this sector, and just how businesses can ensure that they don't close shop.
Thank you. Looking at the environment and also with the extension, definitely it tells you lives matter. The most important thing, as we do all these businesses, you can imagine if the whole nation were to go down, that is not our wish. Then let's comply, let's operate within the COVID-19 protocols. And actually, most importantly, is just to make sure that you sanitize, you also stay safe, because we need you today, tomorrow, and into the future. Remember, the generations what we are doing now is going to impact in the future generations. Then looking at it from the angle of even distancing and how people are doing business. If you look at it, entities have actually started now, people operating from home. You do not have to come to the office. So it tells us then with the embracing of technology and even that aspect of even embracing local manufacturing, supporting our local industries, then it's going to open up even more opportunities and create employment for our people. Okay. And that aspect of resilience is a plus in terms of from the SME space. Then it tells us that there is much more we can do within the SME space. And that now the government support and even the key contracts, and we are finding now what is happening around the roads and the highways, then our people are more engaged in actually they are getting to do on a daily basis. Then as banks now, we come to support them and walk the journey with them. Okay. The future looks positive, and actually when I look at the stats, even from what we saw from KRA, the revenue collection, what we're even seeing projections from a negative growth now of now looking at 2021 over 6% and north of that, then it tells us then we've already learned for the 9 months we've been in 2020 during COVID. So now it's now upon us to navigate, stay with it, and now learn to operate better.
All right. Wonderful. That has been Mr. Simon Dungu is the Chief Retail Banking Officer at Family Bank, if I'm not wrong. Thank you very much for, of course, guiding us through this, the last 1 hour of this discussion. We have been talking about small and medium enterprises in the country, the important role they play in our economy, and the opportunities available and the support that they need to recover, especially during this COVID-19 period. And of course, at only 4 minutes to 9 a.m., unfortunately, we have had to come back to the end of the discussion. We cannot, of course, sample part of the feedback that we have received from you, but we have noted. And the discussion, of course, continues on social media. Keep tweeting us at NTV Kenya, at Victor Kiprop #, New Normal. Or you can also follow the discussion on Facebook and Instagram. But for now, it's goodbye. We'll see you again tomorrow at 7 a.m. as we talk about the COVID-19 vaccine, the update of how many people have so far taken the vaccine in Kenya, concerns about the perception and the reception among communities and healthcare workers, and concerns about how long it's actually going to take us to vaccinate the country's entire 47 million population, and of course concerns around the globe, of course, about the efficacy and the side effects of the AstraZeneca vaccine, which is what Kenya has received so far in terms of COVID-19 vaccine. My name is Victor Kiprop. I've thoroughly enjoyed your company throughout the last 2 hours. We hope, of course, we can see you again tomorrow. Keep watching.